market movers. This is The Pulse with Francine Lacqua.
Well, good morning, everyone, and welcome to The Pulse. I'm Francine Lacqua here in Zurich, and these are your top stories. China hits back at Donald Trump's opening trade war tariffs by targeting a handful of American companies and slapping levies on some U.S. goods. UBS says it aims to back up to $3 billion of its own shares this year, but shares reverse initial gains. Well, our interview with the chief executive, Sergio Ermotti, coming up. Plus, later this hour, we're live from Hamburg as we explore what a new trade war can actually mean for Europe's biggest economy weeks before the German election. Now, there is quite a lot of going on in the markets. We also had a good conversation with Sergio Ermotti about some of the volatility that we saw over the past couple of days, if not weeks. Now, stocks actually are pretty steady now after the to and growing from the U.S. tariffs. Again, U.S. stock futures pretty much steady, the dollar weakening a touch, investors speculating that China's restraints really in retaliatory tariffs may actually help avoid this worst case scenario in the emerging trade war. I'm looking at S&P futures, they're down some 0.2%. Again, it was just yesterday when the president granted Canada and Mexico this last minute reprieve from a 25% tariff following leader talks. Now, some of the other things we're watching out for, let's look at dollar, but also treasuries. I'm looking at some of the other things that we need to keep an eye on. Now, again, because China seems to be carefully calibrating their response to avoid major blowback in China's economy, I'd also probably look at yuan. Gold, 2,815, euro dollar 103.37. So China has retaliated against U.S. tariffs, which came into effect this morning, kicking off a trade war, while Beijing is imposing 15% levies on U.S. energy imports and a 10% tariff on American oil and agricultural equipment. Now, China is also launching an antitrust investigation into Google. Chinese stocks traded in Hong Kong rebounded on the news. Joining us now is Bloomberg's EMEA News Director, Rosalind Matheson. Rosalind, when you look actually at some of, what China could have done, are they really holding back? So it's a bit of a tit for tat, but they don't want this to escalate.
Well, it's very reminiscent to some extent of what we saw in the first Trump administration. So what you have is an announcement by the US, a calibrated response by China, and then we also saw China take action and the US take a fairly calibrated response. The idea is to send a message without tipping things far into escalatory territory. So what we see is really a kind of a targeted response by China. Obviously, LNG is significant, but China doesn't really import a lot of coal from the US. You cannot access Google in China at the moment. So it's about sending a message to Donald Trump that Xi Jinping wants to come into any conversation, perhaps even later today, from a relative position of strength, but he doesn't want to put things into a position where neither side can back down. And it's also about Xi Jinping sending a message domestically to the people of China that I am actually standing up for China here in a certain way. And it's probably about that messaging that's more important. And it's also about China really trying to pivot their economy bit by bit to a more of a consumption model. And that's what we're seeing in the announcements from state media and from officials in recent months. So it all fits that picture. And that's why you're seeing markets not react massively to this latest development. Of course, this is the imposition of tariffs on either side. That's not what happened, obviously, with Canada and Mexico, but it does seem to be a fairly careful response so far.
Ros, what did the last 72 hours actually teach us? Again, there's always a way of negotiating with Donald Trump. I know a lot of the headlines are saying, from the tariff guy, he's now a transaction guy. Is it really that simple?
Well, it's a bit hard to say because obviously, Trump is someone who reacts quite quickly in the moment. Perhaps he feels something about an issue and he just responds very quickly. He likes to talk a lot, so he'll announce tariffs on Colombia and then say he's not going to put them on a few hours later. So he's very instinctive in that regard, but he is also a negotiator and a businessman, and he wants something in return. The tricky thing here to ascertain is how do you come at him? Does he respect you? If you come at him from a position of strength, that's what we've seen China try and do. I mean, it was interesting to see Mexico went very quiet. They didn't announce any retaliation when Donald Trump said he was going to put tariffs on. And then, of course, there was an agreement to defer. So that's been temporarily paused. Canada immediately announced retaliation, and yet they still also got a pause in the end. So it's really about the personalities involved. Can you have that conversation with Donald Trump directly on the phone? Can you reach him yourself? And how can that conversation go? But it seems to be you can either come at it either way, and we'll have to see which one is more successful in the long run.
Roz, how far away are we from EU tariffs? I mean, given the speed at which everything's happened in the last 2 weeks, could we expect something this week, or we just don't know?
We really don't know. I mean, we also see that for now, at least, Donald Trump seems to indicate he's given the UK a pass. But for the UK, that could be a temporary reprieve. I mean, Brexit, maybe that's the one upside that we can see from Brexit, is that it does separate the UK from the EU a bit. But equally, that puts Keir Starmer in an awkward position because he's trying to re-engage the EU, including on trade. So that's delicate territory, and that could mean that Donald Trump at any point does change his mind. I mean, obviously, Trump has commented repeatedly about Europe. He does say that he sees unfair practices with Europe. He sees that US companies not being treated fairly. That's his view on that. And so at any point he could decide that he's going to come at Europe. The question is, how prepared is Europe, how organised is Europe, and how united is Europe, particularly in any kind of response. And the unity thing is going to be really important for the EU.
Roz, thank you so much. Bloomberg's EMEA News Director Rosalind Matheson. Now joining us is Goldman Sachs' Chief European Economist Jari Stehn. Jari, thank you so much for joining us. You come in the studio. I'm in Zurich trying to follow some of the news that we're seeing out there. I'm sorry about that. But Jari, there's a lot going on in markets. And for an economist, I guess you look at the impact that some of these tariffs have on inflation. It's unclear what Donald Trump wants, whether it's a deal or whether, some of these tariffs will actually be pushed through. How do you view it going forward?
Yeah, I mean, as you said, it's a very fluid situation. It's very tricky to have strong views on magnitudes and timelines here. But to us, really, the key is the uncertainty that this is creating, trade policy uncertainty, broader macro uncertainty. And what we found in our work is that this trade policy uncertainty in of itself is likely to have significantly negative effects on things like investment, on confidence, and therefore on growth. This is very much what we saw in 2018 and 2019, when it was very clear, it was very unclear what size of tariffs Trump would impose on Europe. In the end, we got very targeted tariffs, but the uncertainty that was created in the meantime had very negative effects on growth across Europe. And we essentially have something similar in our baseline this time around. Trade policy uncertainty weighs on growth in Europe. We think it slows euro area growth by about half a percentage point, even though the tariffs in the end, we think, are going to be more targeted on the auto sector rather than being a broad-based increase in tariffs.
But, Jari, given that we're seeing negotiations, we saw that with Canada, we saw that with Mexico, that tariffs have just been postponed by 30 days. What does it mean for Europe? Is that a blueprint of how it could happen with Europe, and what can Europe offer in return?
Yeah, to some extent, it probably is a blueprint. I think it's widely expected that Trump will propose tariffs on the EU. And I think the EU essentially has both carrot and stick to try to respond to this. I think the carrot is going to be to offer the US to buy more US goods, whether that's energy related or related to the military. And I think the stick would essentially be to say that if the US imposes tariffs on Europe, we would retaliate. And that's really how we think this will play out. But as I said, ultimately, we think a more targeted set of tariffs is likely because we do think Europe is willing to buy more US goods, to raise military spending, and to help Trump achieve some of the broader geopolitical aims that he has towards Europe.
Jari, it seems that the ECB remained pretty unperturbed, especially when Christine Lagarde was commenting on the falling wage growth. Do you see the ECB staying its course no matter what happens with tariffs?
We do, yes. And I would agree with you that I think the commentary on wage growth was particularly confident. President Lagarde said We have confidence in inflation returning to 2%. We are particularly seeing quite a lot of progress on the wage front, which we would very much agree with when you look at some of the recent wage agreements in Germany, for example. So we do think we are on track back to 2% for inflation. And we do think that means that the ECB jobs at some level is relatively straightforward for now. We think they will continue to cut 25 basis points a meeting in March, in April, in June. That would take you to 2%. And then we think there's going to be one additional cut to 1.75% in the summer, because we think the trade policy uncertainties that we just talked about are going to weigh on growth and are going to lead to a weaker growth environment than the Governing Council currently expects. So when you take our growth forecast, we have 0.7% growth for the euro area this year. The staff projections from December have 1.1%. So we still think there's some downside there as the ECB incorporates these trade tensions into the forecast. And so that's why we think ultimately rates will head a little bit lower than the Governing Council comments currently imply and than what markets currently price.
Jari, we also have, of course, big elections in Germany, February 23rd, that were upended because of domestic issues over the last 10 days or so. Depending on how difficult, I guess, a coalition building will be due, how much of that has an impact on growth, but also how to deal with Donald Trump. I mean, last time Germany was firmly in the eye of the storm.
Yeah, I think it's very likely to be in the eye of the storm. Germany is most exposed within the large euro area countries to tariffs. And of course, Germany also has struggled economically now for some time, hasn't really grown for a number of years. At the same time, Germany actually has the most fiscal space amongst major advanced economies, and so there would, in principle, be room for a fiscal response here. Now, we do think there's going to be some expansion of fiscal policy. We do think that the Conservative Party, which is ahead in the polls, would be open to some reform of the constitutional debt brake and increase in military spending. However, we think that will take some time. We also think the magnitudes are going to be a bit smaller than some people think. And, of course, there's a risk that there will not be enough majorities to amend the Constitution when you look at the shifts in the recent polls. And so we would say, yes, there's a chance for some more fiscal support out of Germany, but I think it's unlikely to be quick enough, big enough to really turn the growth picture around in 2025. And so at the end of the day, that does leave us with a subdued growth forecast and with an ECB that is likely to respond to that.
All right, Jari, thanks so much. Jari Stehn there, of course, Chief European Economist at Goldman Sachs. Of course, we also have this week the BOE. That'll be really interesting, given there's a lot more market commentary that maybe the BOE and maybe sterling is now a haven. Now, Palantir shares have jumped pre-market after full-year revenue forecasts that exceeded analyst estimates. You can see, if you look at Palantir, gaining 18%. Now, best known for its national security work and more recently its AI platform, Palantir's stock actually surged 340% last year. Coming up, UBS tops profit expectations, but shares are under pressure over capital requirement rules. Our interview with the company's chief executive, Sergio Ermotti. That's next, and this is Bloomberg. UBS shares reversing earlier gains, with analysts now viewing the company's results and the $3 billion buyback as already being priced in. Now, there's also uncertainty over capital requirement rules. Now, Chief Executive Sergio Ermotti spoke to me about the company's performance and the ongoing integration of Credit Suisse.
The most critical part of the integration has been always going to be the migration, the data migration. We are migrating in total 110 petabytes of data. 15 have been migrated outside Switzerland. The big chunk of migration is going to start in a few months in Switzerland, where we migrate the balance, around 95 petabytes in 3 tranches, basically in the spring, late year, and the beginning of 2026. And this is definitely a journey that requires a lot of planning and a lot of good work, and the team is on top of it. But we cannot be complacent. So it's a very big task.
If you look at the regions, how are you satisfied with the progress in Asia?
Very good. I mean, in Asia, if you think about the fact that we have been growing very fast, but most importantly, we have been doing that while going through the migration. And so all our colleagues, front to back, have been somehow distracted by that, but at the same time, they were able to stay close to clients, grow assets, grow our business, and be a reliable partner. So in that sense, I'm also pleased to the progress we make in the US, both in the investment bank and also in wealth management, where we are now executing on our plans to restore a good level of profitability, and in the investment bank we are gaining market share.
There's a lot of optimism of banking in the US. How will you take advantage of that?
Look, I think that we are in the U.S. is a very important market across the board for us. Is the largest wealth management market in the world. We are an important player there. We want to enhance our capabilities. We want to enhance our profitability. And in terms of the investment bank, we see a good momentum in the pipeline building up. Having said that, if you look at year-to-date volumes and activities in capital markets is down 26% year-on-year. So while it's a very promising pipeline, the truth of the matter is that the year has started in a rather slow way compared to last year.
But when you talk about enhancing capabilities, would that also be through acquisitions in the U.S.?
I think it's at this stage it's totally premature for us to talk about acquisitions. We have enough to do in order to improve our profitability with the current setup, and so we need to digest what we have on the table right now, and then we'll think about the future.
Sergio, I know it's been a couple of quarters where there's this overhang of capital requirements from the Swiss authorities. Any more information on what they plan to do?
No, look, I know as much as you do in terms of exactly what they want to do. We're going to know much more in May, according to the State Secretariat for International Financial Matters. The public consultations of the government proposals are going to be released in May. So hopefully the proposal will be aligned with the desire of the Swiss Federal Council to maintain a competitive financial centers and allowing UBS to be competitive in the marketplace, and for us also to be able to be a reliable partner to the Swiss economy.
But do you think they'll soften their stance from their initial proposal or press speculation because of what's happening in the U.S.?
I have no indication of, it's very premature to speculate what's going to happen.
Talking about the U.S., what do you expect for markets going forward? We've seen quite a lot of volatility. There's talk about these tariffs. Unclear whether this is a president that wants deals or would rather put tariffs and then think afterwards.
The market has started with some good momentum. You now see a little bit of volatility and dislocations. It's fair to say that the tariff topic has been somehow already priced in the market, and you can see it in the last few days, despite the fact that we are moving to the next level with the implementation of tariffs or the threat of implementation. You can also see the willingness of both parties to engage and negotiate, which I would say for the time being is okay. But any major positive or negative developments on that front will create spikes in volatility. For sure, negative outcomes are not priced in the market. The consequences for the economies, the affected economies, could be significant to inflation. I can see inflationary pressure coming out of tariff war, and that in turn would mean that central banks would need to stop their easing path, potentially even reverse, something that is not priced in the market.
The UBS Chief Executive, Sergio Ermotti. Now, much more to come. We talk banking, we talk markets, and of course, we talk tariffs. This is Bloomberg. President Trump has signed an executive action to create a sovereign wealth fund for the U.S. Now, the president says Treasury Secretary Scott Bessent and Howard Lutnick, his nominee for Commerce Secretary, will spearhead the effort. Now, the action calls for officials to submit a plan within 90 days, including recommendations for funding, investment strategies, and governance. And the U.S. Secretary of State has told Congress that the U.S. Agency for International Development may be abolished after a review. Now, according to a letter seen by Bloomberg, Marco Rubio wrote that the current foreign aid process does not benefit the American people. He says some U.S. aid operations may be integrated into the State Department, with others shutting down. Coming up, we're live from the biggest port in Germany for special coverage of the global trade fallout and what that means for Europe's largest economy just weeks ahead of the country's election. This is Bloomberg.